Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz with Northstar Commodity. We're seeing mixed trade over in the livestock grains, mostly lower, except for the nearby soybean futures. And Mark, let's talk a little bit about the grain trade because right now it's about crop ratings, it's about weather and the extended weather forecast, isn't it?
Yeah. For the most part, it's all about weather. The export demand has basically dried up, and in the case of corn, that's gonna be the issue here because you've got Brazilian corn, which the harvest has now begun, and the yields and production appears as though it's going to be every bit as bigger than what USDA currently has on the books. So the Brazilian corn trading roughly 70, 80 cents a bushel cheaper than U.S. corn in the world market. So your export demand is going to go down there. You can actually start to see that a little bit now where basis levels are starting to get just a little bit weaker here in the U.S. on nearby corn. It's still holding firm, don't get me wrong, but once the ethanol boys get filled up, that you're going to start seeing a weaker tone to the basis. So it has to come from the weather scenario. And quite frankly, the weather becomes more of a critical situation once you get past, say the 20th of June. That's when you start doing irreversible damage to the crop. But right now, I'd still say we're laying the groundwork of some problems. But as far as seeing any type of a significant yield reduction, I don't see that yet.
Okay. And USDA, will they acknowledge any change at all in yield in the report on Friday, or will it be all about demand changes?
I'm still leaning towards just demand changes, although they would have a precedence of lowering the yield. Keep in mind on corn, they do have it at a record 182 bushel per acre, which is about 4 bushel higher than the previous record yield that we have. So there would be at least that because your crop ratings have declined about 10, 12% less than where you were a year ago at this time. So that might give them the precedence to do so. I don't think they will, but it certainly would be something that could be a little bit of a surprise there.
You bet. The other things that we're trading right now, we've been kind of watching what's been going on over in the Black Sea with that situation. So some geopolitical influence at times, although, boy, the wheat market really faded that Ukraine dam news yesterday, didn't it?
Well, it sure did. I mean, we were up sharply, but here's the thing, and the problem. What's going to be for the wheat here for the short term? Again, we don't have much as far as export business. Now we are getting closer to becoming more supportive in export demand. We finally have seen Australian wheat now go above U.S. wheat in the world market for the first time in over a year. So hopefully we got something at least brewing there down the road. But for the short term, wheat harvest in the South has already begun, and it's going to be in full earnest here on the hard red wheat and soft red wheat by the end of this week, and for sure early next week. So any little rally that you have, you're going to have new crop wheat coming onto the world or onto the U.S. market, and that's going to keep an anchor on the wheat market here for the short term.
So what are you hearing about early yield results off the combine on wheat? And what is USDA going to make in terms of any adjustments in terms of production here on Friday, especially with these abandoned acres in play?
Well, I think the abandoned acres is probably the bigger key here. Whether it becomes as significant on the abandonment of acreage as what they are reporting, they've got a pretty high in here. Yields that I'm getting so far have been early. The west central part of Texas, 15 to 25 bushel per acre, up into Oklahoma, 15 to 25. As you go to the eastern side and you start getting in, then the crop wheat yields certainly pick up. And I wouldn't be surprised some of those being quite large. I've got a few guys that are even talking about potential record wheat yields coming out on the eastern side of Oklahoma into Missouri. That the crop got far enough along before the dryness came in to impact them. So they'll start their harvest though here maybe end of this week and or early next week before they get going.
I want to dive into this cattle market. We're scoring some all-time highs here in the live cattle futures as we speak. And if we're not taking them out in the feeders, we're pretty close to. This is kind of a parabolic move. What's going to stop it at this point? Because the futures seem to be chasing this cash trade, which also looks like it's higher this week. I saw some $300 dress trade yesterday on the mandatory report.
Yeah, you're going to the dress trade box beef prices for starters have moved up to $320. That is a short-term resistance level. If you clear that, then you're going up to 350 to 360 on it. So those just be things to watch on that front. Now, a short term, what stops it? You're right. The cash market has been the leader here, and it's been stronger. And the futures are at this significant discount, continue to try to play catch up. But the futures basically move no more than what the cash is, so it really doesn't close the gap that much. So right now, it's you want to go short the cattle futures. You think it's overbought, which it may very well be, but you just get steamrolled. And anybody in the short position is finding some pretty significant margin calls. So they're more of looking to bail out than they are to put in more short positions. What will eventually cure it? High prices will eventually cure it. Now, another thing that is, and I believe is going to start to develop here, as cattle prices go higher and your replacement cost on to replace cattle is going up significantly, you're going to start seeing farmers, I believe, start feeding the cattle longer, putting on more weight because it pays off to do so. So I think that'll be the next obstacle. Short term, that makes it a few less cattle coming to the market, and then eventually keeps the market stronger. So maybe another 1 to 2 weeks before we run into some type of a problem on that cattle market. But for right now, it's been going up. And we've always talked about that for the last month and a half, 2 months. It's been a very orderly cattle market. Now the kid gloves are coming off in here, but we still haven't seen limit up move yet. And I still think that was probably what will have to come before it's finally over with.
Yeah, that's kind of what is indicative of a blow off top that we kind of always watch for in that market. But are we into the tightest numbers yet? And even if we saw a pullback, with the funds just use that as an opportunity to buy more? But, they're really long right now.
They are on the long side, and it's something that's a little bit nervous. I think what's still kind of impressive is that you're still sitting out here with their beef export business, which in the last 3 weeks has been actually quite good. So even the movement of beef has been well. If you go to the grocery store, beef prices have come up, but they have not increased at the grocery store as much as I thought they would by this time. So they're kind of keeping that somewhat in check here, which hasn't shifted that demand over just yet. Now, eventually you could definitely start seeing where the features this week in the grocery ads were definitely going into the pork, and some of that stuff going off at some pretty low levels compared to where you are with the beef.
Yeah, talk about the pork sector here, because we've had a pretty good recovery off of the recent contract lows in that market. But how much more do you think we can sustain in terms of a rally or recovery?
Well, it is impressive. The one thing, what's been a little bit tough with the hogs is we've had the wild swings now in the last 5, 6, 7 days in the cash market, where it's not uncommon on cash hogs to be moving anywhere from $3 to $5, $6 on a daily basis, and that's pretty significant. You've got the cash up at $92 to $93 now. That's new highs for the year. The pork cutout made a big move the other day, and then of course yesterday gave it all back again, all of it on bellies. There's two primal cuts that are having a struggle here, and that's the bacon, the belly market, and the rib market. They're way undervalued from where they normally should be. That's just because we've got the burdensome supply that is going on. The big thing here on the pork is our export demand has been okay. What it really needs right now is the domestic demand to pick up. That has not happened yet. May very well eventually start to develop, but at the present time, it just hasn't kicked in enough yet. So if you really want to start seeing the market move higher, to me, you're going to have the pork cutout start showing better strength than what we do.
Okay. There's been rumors of a government buying program like what we saw over on the dairy sector. Are you hearing anything about that, Mark?
I haven't. If we do, certainly would. They certainly could buy some stuff pretty reasonable, and if they want to take some off the market. I think the hog industry right now, if you figure on the price of feed and the price of what they're getting for the pork prices, that market price, they've been doing losses now upwards of 7 to 8 months, consecutive months. So starting to have its wear and tear on the hog industry for the present time. Down here, we saw this week's ads. You had center cut pork chops at $1 a piece. So I thought what was ironic is you could actually buy center cut pork chop now cheaper than you can buy one tomato.
Oh, that's crazy. That is too crazy. Just one last question though about the hogs. You know, the funds were record short coming into this week. How much of it is a change in fundamentals versus just short covering by the funds?
I would say right now it has been mostly the short covering by the funds. Now, keep in mind, this is a big move. You're at $14.50 on the summer contracts in 6 trading days. That's pretty impressive. Now, it just tells you we were down significantly. Even though you've gone up $14, you're still not back to even break even for the hog guy. We're going to have to get back into that $94, $95 price level. That's where it's profitable. If you're in the cash, you're probably able to make it. But that was just yesterday alone. To get to the futures and everything else, you're going to have to go up to the 94, 95. If you can clear 88.50, technically on the chart, clear 88.50 and close above it, it opens the door to go up to the $92 to $95 price level for the summer hogs.
Okay, I wondered where those algorithm traders were going to kick in there. Okay, thanks for joining us. Mark Schultz, Northstar Commodity. That's Markets Now.